1-minute chart here, if we go down, as soon as we took out the orb low, we had this fair value gap that took out the orb low, and then we held this fair value gap for a long time. And so this is a good idea of saying, hey, I'm probably this price action. Yes, my orb quote model tells me to go short, but this price action is going to tell me, hey, this is not the right time to do that, and this is more likely to fail. And so instead of just, and that's where it's really difficult to create bots, in my opinion, is because you don't get the little stuff like this. You don't get the little kind of details that are almost they're kind of layers into it. They're a little harder to explain sometimes. Where okay, yeah, we took this out, but and it's a new concept that I'm really thinking of a lot of times is like some fair value gaps are meant to get inverted. They're only getting created so they can be a manipulation leg to get inverted to continue a reversal. And like when we take out levels like right here, we want fair value gaps to get created. So that way we have fair value gaps to invert. And so that's where right here we looked at it, we inverted, took this out, then immediately inverted it and held. And once you hold the inversions like this and holding the opening range, you know it's less likely to actually hold, that the opening range is more likely to fail. And that's exactly what it did. So really good example here of just using that discretion and using the price action and your own kind of knowledge of things that you know instead of blindly taking models. That's the same with your ILM model. A lot of people will see ILMs to the downside and take them and just get cooked because we're in a bull market. Some ILMs to the downside are working. Yes, don't get me wrong. But for the most part, what are we seeing more often than not? ILMs to the upside working. We just have to find um, the right liquidity to trade from. Most of the time, as we know, it's previous day low, previous session lows. So we have here, and this is why the first couple ILMs didn't work. We have, so our previous day in the market right now is Thursday. Friday does not matter because it was a holiday. So our previous day right now, and Friday's actual candle, so all of this action right here overnight on from here, let me mark it out, 3 o'clock Pacific, 6 o'clock Eastern, from the futures start all the way to right now. This is all one daily candle. So when you have holidays and you have London open on those holidays, it's not actually that doesn't count for a whole nother daily candle. That's the same daily candle as what we have right here. And so all of this is all one daily candle. So our previous day low is right here at these levels. And it's actually this low right here, to be exact. And so that's one reason why. And yes, it was choppy. And we had Trump speaking also right around this time. I think it was noon. Trump started speaking. And and we talked about last week the hierarchy of our news. Whenever Trump is speaking, he's one of the highest in our hierarchy of news. He can make the market do anything. He says one word and the market goes up or down. And I mean, this is literally what happened. Trump said something about tariffs, and then the market moved down 126 points. And so that's where when you know that Trump is speaking, then you definitely have to be more conservative and say, you know what, I'm just not going to trade, or I'm just going to watch the market that day or scale down. Like right here, if you were in this ILM long, there was that 1 minute kind of failed orb ILM, which I think these are completely valid. Yes, it didn't take any other liquidity, but you have a clean and clear change of liquidity and change of character. What is an ILM? By definition, what are you doing in ILM? What do you guys say? What are you doing in an ILM? Entering on the change of delivery, exactly. So an ILM by definition, by of what it actually is doing. So we look at just kind of the fundamentals, right? Is it is going from bearish order flow, holding bearish order flow to bullish order flow. And by order flow, that means fair value gaps. Is it holding bullish fair value gaps, or is it rejecting bullish fair value gaps? Is it holding bearish fair value gaps, or is it inverting bearish fair value gaps? And so when we take out levels, that's when the key times that we're looking for that order flow to kind of change. And so right here we see we have this fair value gap, and like I just said, some fair value gaps are simply made just so they can get inverted. They came down, swept, inverted it, and once you get that inversion, a lot of times you can set your stops. The best way, like, so we had a trade, and there's three ways to really set your stops on these. Set your stops at the lows is the safest. Set your stops at what is going to give the worst risk to reward. Set your stops at the low of the candle that created the inversion. So right here, the candle bodies, or on a failure of the inversion. So those are the couple different ways that you can take an inverted fair value model for your stop loss. And now you can target some sort of highs right here or right here. And right here, even this is a 3.7R. Even this is a 2R. So both of these are valid trades. As long as you can get a 2R, 1.8 really is what you're looking for, 1.8 or higher. So as long as once we took, this was right as we got off stream too. It came down, took out all this liquidity, inverted this, failed the orb, inverted this, and then soon as Trump started speaking, like 15 minutes into it, it just boom, random candles and just displaced down. And if you didn't have stops to break even, you would have just gotten destroyed. And so, but these are completely valid trades, and so you can continuously move as you're displacing and taking out highs. You take out this high, now you can set stops to break even. There's your first target. You're at 2R. You set stops to break even and trim a little bit. And then you can, boom, as soon as it comes down here and takes out the high, now I'm following order flow. So as long as the bullish order flow holds, now my stop loss is at this low. So you take out this high, the first high, you want to see that order flow, that fair value gap hold. We come down into that fair value gap, we hold. We come down, fail to make a new high, and that can be another key to say, hey, you could exit a little more right here. And then as soon as it goes here, there's your trailing stop takes you out for the rest. Does that make sense on how you could have taken this trade? And I was following through and talking about all of this in our Discord. I showed where the entry would be, where everything was. It was all in future chat. I was just kind of tape reading this. I didn't actually take this trade. Well, this was a perfect trade for that proper risk management. So you don't have to always have to have every single type, like a general session-based, time-based liquidity. You can also use the orb if it fails really, really fast like that. Took this in boot camp and got out after this one right here. Yeah, makes sense. That's a sharp candle. And this was not displacement either. I mean, look at this. This isn't what we want to see. This isn't displacement to the upside. We really want to see displacement in more of a V shape. Like this right here, this is, we come down and we displace. This is displacing up here. Look how fast this was versus how slow this took. Good afternoon. I was having a question about some psychology and mindset that we need to have into a brand new Express account. I am trying to see when and where to apply the orb and ILM, for example, like this morning, I was pretty confused. I didn't know which one to pick. I lost 2 consecutive trades. This made me doubt myself. Do you have some tips? Yeah. So the key with the orb and ILM is really, in my opinion, the ILM is going to be the first one you look for. That's really what you're going to be looking for, and you want to look for them in the direction of your higher time frame trend, in my opinion. Those are the ones that are going to play out the most often. And so when we go, the ILMs, what we're looking for is some sort of liquidity to get rated, and then some sort of time-based liquidity to get swept, and then form a ILM, right? Inverted fair value gap. So we have previous day low. So when you get into the market, you have previous day low, you have London low, and then we have this Friday low, which Ty and I were talking about. We are like, does it matter? Does it not matter? And it proved today that it really didn't matter. And because it was the real draw was the previous day low. So these are the kind of key lows that we're looking for. And we did take a trade off of one of these lows today. I missed that one. So here's London low here. And then this is previous day low. So as we are coming into the market, what we're really looking for is to determine how, okay, are we going to do an ILM or are we going to do an orb? Is what direction is the orb looking for and what direction is the ILM looking for? Is kind of my biggest keys for me. So right here, the orb was to the downside. So am I going to take an orb? Most likely not. The higher time frame right now is to the upside. The market, if we go into a 1 hour, daily, 4 hour, doesn't matter. Look at this trend. This is an uptrend. We are going to the upside. So I am more looking for orbs to the upside or failed orbs to create an ILM to the upside. So now you're really just looking for what, because some sort of level that the ILM will come to in order to come in reverse and to go back to the upside. And that's what we're looking for here. So at one of these key levels, we look for them to take, and then we look for an ILM to the opposite side. So this morning we took out Asia low or London low. We had a 1 minute ILM and we took the 1 minute ILM to the upside. This was a great trade. Nothing wrong with this trade at all. It just didn't play out. Fantastic trade. And then afterwards, we had a orb. The orb was to the downside. Do you want to take the orb to the downside? While it's, and as I was saying earlier, your price action is going to be more dominant in a higher kind of order of operations than just a random model. So the model is one thing, but having your price action confirm the model is that's what's going to help you kind of use that discretion to give it a better win rate than just a base. I'm just going to take it every time the model shows. Because if you're going to take the model every time, like the orb model, every time the orb shows, you're going to take it right here and it's going to fail. And then you're going to take it again and it would have been right there. And then you would have maybe made a little bit. I mean, you would have made maybe a half hour here. And so you're not necessarily wanting to take it with just every random time, right? And so that's where the discretion comes in. This one takes out a key level, you invert fair value gap, there's your ILM. You can take that. You take out a key level, you invert fair value gap. And I say it has to be in the right time of the day, but a lot of times these will play out in your PM session, just not as clean. Like this one right here, we took out previous day low. And now we have inverted this 5 minute and 15 minute fair value gap. So as long as this low holds right here, then the draw on liquidity is a little higher. Right here, here, and here. Does that make sense? Noopy? Did I say that right? Noopy? And the model is just telling you how your price action is supposed to do. What'd you rate the 1 minute, 2 minute ILM we saw after what after previous day low? I see a 1 minute. I don't see a 2 minute. I see a couple 1 minutes. It's a lick to lick model. Probably would have gotten stopped out on one and then re-entered again. Unfortunately, because this one is beautiful. Takes it out, sweeps it, comes up here, and then fails the first ILM, creates another one. This is your lick to lick. And that's just type 1 versus type 2 reaction. And then comes back up and displaces through. And this is where the key is. Look at the displacement through here. It's creating fair value gaps versus this first one. It's not creating fair value gaps as it's inverting it. Yeah, and if you miss that first one, that's perfect. And then the second one is really after 11:30, which is what you want to see more often. I don't really want to see, you won't really want to trade. I don't necessarily see trades as much at during this until 11:30 and beyond. And so this is really what you want to see, this displacement above. So this was a good ILM, right? You create here. Your stop, you would have had to use this right here, which is fine. And then you can target just right here. That's a nice 3R. Just low-hanging fruit. Take the first and stop loss. And that's the problem with some ILM with the lower time frame ILMs is you're gonna get stopped out of them more often. That's how it happens really. Even the 5 minute, it didn't because the 5 minute didn't quite invert right here. So that could have been a kind of a key little detail to say, hey, I don't know if it's ready yet. And now we have the 15 minute, the 5 minute all inverted here, and this one's probably gonna play out a little more. This one's probably gonna start coming up to these highs here. So if you would have taken this 5 minute, you'd still be in it. The first one, and you wouldn't have had taken any loss. Stop down around here, you'd still be in this. Right there's a 2R, that's high a day. Right here's high a day. Just do that. Either the data high or the high a day. But then you have to look at what time is it. It's 12:20. It's got less than an hour into the day. So would you really take this? No. That just adds much, much lower probability for me for the trade to play out because it's so late in the day. Because what are the odds that you're actually going to bounce and get that far if we've just gone sideways for 2 full hours now? And that's why people say, "Oh, PM session's been great. PM session's been great." Yeah, that's fine. But in the long run, we have proven over the last 12 months, I think we're at month 11 right now. So the last 11 months, we have proven that New York AM is the best session for us, not New York PM. For us, it's New York AM right there. And so right here, we can show that, hey, we don't need to change. We don't need to go back through New York and go to PM session or anything like that. We just want to stick with what we know, stick with the models, stick with the time of day and the statistics we have. Yes, right now it may not work as well, and that's perfectly fine. But in the long run, it will. How do you take your evals? All use 200 risk. No. My evals, I go a little heavier risk. I'll risk up to 600. Or even just do the passing strat if you have something like that coming up. Like we got CPI next week. So if you need some evals, you could probably just use CPI. But yeah, I'll risk up to 600 on a 50K for evals. That's no problem. I'll do a mini, no problem. Then, because I mean, if you look at my average losses in a row, my max losses in a row, and this is where you can see my max losses in a row is 5. That means if I have 5 trades that I can lose on and I have 2,500, then I can risk 500. And this is 5 losses in a row over the last 6 months. So my odds that I'm actually going to lose 5 in a row are pretty low. And the odds of a 5 being all the full positions are very low as well. So so statistically, on an eval account, I'm more than happy risking $600. No problem at all. Especially like a $15 eval account, I don't fucking care at all. And I'll be more but I'm still trying to take the same exact trades. I'm not going to change the trades I take. I will take the same exact trades, the same time of day, the same model, everything like that. Hit the gym. Appreciate it. Thank you, Nuapi. Have a good day. Does this work on other assets other than NQ? Yes, this works on multiple assets. It works best on NQ and indices. Orb itself works best on indices and stocks. It works mediocre on gold and crude oil. It works better on gold and crude oil during London session. Mediocre because so many people focus on Nasdaq and stocks during New York session, and so it doesn't work great on New York session for other assets, but it works really good for like YM. Works good for RTY, which is a Russell 2000. Works good for ES. Works good for Nasdaq. ILM works good for all assets very, very well. Every single asset. I have $1,000 left in drawdown on a funded. Should I keep trading normal on stream with you guys? 200 risk, so it's better to just do everything half position now. I would just use 200 risk. If you have 1,000 drawdown, 200 risk is 5 accounts. Are you okay? 5 trades. Are you okay with taking 5 trades and losing that? Or do you want to do 100 risk and take 10 trades and that's going to be your lost account? That's all dependent on what you want. How much do you really care about the funded? Because if you have $1,000 left, that means you have $1,000 in drawdown. If you take 200 risk, it takes 5 trades to get out of drawdown. If you take if you take $100 risk, it takes 10 trades to get out of drawdown. No, no, I am not in this, Justin. Simply showing the difference between the displacement on this model right here versus the model that we took this morning, where there wasn't quite as much displacement right through here. And that's why it failed quickly. And that's what you want to see. You want to see when you enter a trade and it fails, like I would rather it fail quickly than it not fail, than having to sit and wait for a long time. So like I'm pretty sure it was this one right here. We inverted here, we came up, and we failed it. And it's like, this is what we don't want to see, that kind of trickling around, and that's why it fails. And this is why this is mapped out. Versus, yes, it had one failure, but then when it worked out, it displaced super heavy. I have 550K accounts under my mom's name that I passed, so my risk should be 400 per trade. Mass loss limit is 450. So you could do 450 even, 455. But 400 to 500 would be about what I would do, Andy. So if you have, and so what we do as a base, and this is again just to give you 10 trades. If you want to risk a little more, then you can risk a little more, and especially as you get in more, get a bigger buffer. So it's 10% of your starting drawdown. So like what he was saying is he has 4,500 for a starting drawdown. So roughly 400 to 500 per trade. And I would do that. And that's what I recommend people to start with because this gives you 10 trades to before you blow the account. 10 losses in a row before the account is blown. And so I recommend starting with this. And then once you get more of a buffer, once you once you get more of a buffer, once you get more confident and comfortable, then you can start scaling up and then you can do 500 to 600, 600 to 700. If you're using 150K accounts, a lot of times you should be using at least 5 to 10 minis, 5 to 10 micros. You said gold works good for orb pre-London. I don't know about pre-London, but I know London works well. So 30-minute orb instead of 15-minute orb. But it does work well for London. I max out at 2 trades per day. 2 trades for me and I'm done. 1 win and I'm done. I'm kind of just if I can take 1 good win, then I'm having a good day. Because if you think about it, if you can just take 1 good win, 1 2R, let's say we're going to use this parameter right here that we have. You have 1 2R, so you get $800 per day. You get that 2 days out of the week. That's 1,600 a week. You get that 3 times a month. Say 1 week, you just break even. Times 3 times a month, that's 1632. That's 4,800 just to start with. That's per account. Now you have 5 accounts. Times 5 accounts, that is just about 20,000 a month. 5,000 would be 20,000 a month, so this is just under. 48 times 2, that'd be 96 times 2. That'd be 18,200, 19,200. That was just in my head. That might be wrong, but roughly. Before, yeah. So we're looking at roughly 24K, and you can take half of that up with most accounts. With TopStep, you can take half of that. With everything else, you'll have to look at what everything is. So you can take half of that, so about 10K. That's a good month right there. And if you can just continuously do that, build more accounts, and do that over and over and over, you're going to be extremely happy. And then throughout the rest of the year, you just build, you build, you build, you grow more accounts, you build accounts, you grow more accounts, you build accounts, you build buffers. And then next thing you know, you got 5 TopStep accounts, 11 Bullinox accounts. You max out Bullinox. And so now you have, so first you max out. So like what I recommend is maxing the prop firms per prop firm. So max out per prop firm. So let's say you max out TopStep first. And then next thing you know, you start in Bullinox, and then you max out Bullinox. And then you go and you max out Apex. And then you just continuously build and build and build. And then you can start building it personal if you want through after that. And this is how you can scale. This is how you really can start scaling. And what you can do, because Bullinox, it depends on how, because Bullinox, you can only get 1 extra at a time. So if you wanted to do Bullinox and Apex at the same time, if you're not too worried about that, you can do that. Or TopStep and Bullinox at the same time. Because with Bullinox, you have to pass your counts and then get 2,600 on all your accounts. And then once you have 2,600 on all your accounts, then you can get 1 more account. And then you have to get 2,600 on that account. And then once you get that account, then you can get 2,600 on that account, then you can get 1 more account, and so on and so forth until you get 11. So it might kind of take a little bit longer to get that Bullinox 11, but constantly scale up. But then Apex, you can get 20 at a time right away. And so if you want to do that, you can just copy trade with, and if you're using Apex with that, you are just going to use NinjaTrader. You can use NinjaTrader with Replicanto or TraderSync. TopStep, you can just get 5 at a time and pass them all and scale with them all. So that's up to you if you want to use start with 1 or 2 and then pass those, get a payout, use those payouts to pass another to 1 or 2, and that way you already have proof that you can get those payouts because that's the biggest thing. Yeah, 5 accounts with 1 name. Be very weary if you try to use another person's name. They're pretty on it if you don't use VPNs and things like that. What about Top One Futures? And there's a million other futures companies. Absolutely, there's a million other futures companies, and they are wonderful. These are just kind of the most popular right now. How many fundeds do you run at a time? Right now, I have three fundeds on Bullinox, 1 funded on Apex. I'm about to finish my fourth Bullinox and my fifth Ape in my second Apex within. Well, I'll be gone the rest of the week, so it'll probably be next week that I'll get those finished. I had 6 Top Step, and then I got banned, so I had to reset. Yeah, Apex is perfectly fine. The whole thing is you gotta pay to play. Apex is gonna be they're one of those things where you have to just trade the same way every single time, and you just don't deviate from your plan, and they allow you to. They have no problem with that. Do you only give 2 weeks time for an eval to pass? 2 to 3 weeks, yeah. Evals shouldn't take very long. I know plenty of people that are funded with Apex and get paid out often every couple weeks. So I have no worries about Apex paying out. They have almost the exact same rules as Bullinox. They use a 30% instead of a 40% consistency rule. Everything else is very similar. They show a lot of rules to try to scare people, but it doesn't matter. Just trade normal and nobody's gonna bother you. With news, yes, the news strat does not work with Apex. I don't use it with Apex. But on Apex, you trade both Orb and ILM. Yes, everything I trade in on stream, I trade with Apex. So the top step ban is exactly what I was saying with using another person's account. They banned me and the other person, and so I cannot use any. And I was just about to get a fat fucking payout too. And so I was using my wife's account. They sent me an email on my wife's account. They said they are they are banned. This is a final. There is no way that you can try to justify this or anything. This is not up for debate. You just cannot trade with us anymore. And then about 2 months later, a month later, they sent me a message saying, "Hey, we already banned this other account. Now you're banned." So yeah, just be careful if you're going to be trading with multiple people's accounts because I have, from our experience, not had good experience with it. Well, that's the beauty is there's a million other prop firms. Now I'm with Bullinox, now I'm with Apex. I just had to kind of restart, which is no big deal. Different internet connections, different Wi-Fi's, different VPNs. I mean, different devices, everything. Just be very careful. When it says Apex does not have Project X. Yeah, Andy, you're doing it right, man. Any experience in the latency between multiple Apex accounts, execution of these copiers above when using NinjaTrader. I don't use NinjaTrader. I just use Tradeovate. Right now I only have one account, and so as I scale up, because I don't like, I ju- I just use one account and then use those payouts to get multiple more accounts, and then those payouts to get multiple more accounts. So I have multiple that are about to get used, about to be finished. But I just use Tradeovate with the Tradeovate built in, and I have no problem with that. Yeah, no problem with it with the Tradeovate. Well, the thing with Tradeovate is you have to use your a like you can't be on mobile for the copier, and that's the good thing about Bullinox is you can be on mobile. Yeah, Parkside J, just go right here, notifications, and then play sound and use this. Where did Bullinox even come from? Nick's funded it. I don't know. This stream tried to hit this morning. Nah, we took a loss. It's cool. Yeah, I have no clue. Bullinox just kind of just came in out of nowhere, and it's. I mean, we would definitely not build a prop firm for Playbit. That would just be dumb. You guys would fucking rinse us. Yeah, apparently they've been around for a while. I was a little like I was skeptical about them. Like you guys, full transparency, everybody knows. I'm sure if you've been here for a while, I was very skeptical about them for a while, until I started seeing people get get payouts and stuff because they do. They don't have any social media. They're very 90s driven, kind of based on their dashboard. Everything kind of it was very kind of skeptical, it makes you a little more skeptical. And so then we started seeing people getting payouts and more than like not just Knicks, but like a lot of people getting payouts. And so then it's like, okay, cool, I'll try it out. Yeah, and I don't see a lot of groups. They don't have a big social media following. They don't have any, so they don't post on TikTok, they don't post on Twitter, they don't have a Discord or anything like that. So like, yeah, there's some interesting things about them, but we can't deny what we've seen. And I think a lot of it is if they do all those things, they have to pay more money to more people. If they pay more money to more people, then they can't give out accounts as cheap as they give them out. Starting clipping for play on WAP. It's funny. How did this? Yeah, it's just doing nothing. See, this is what I mean by you don't want to get your hopes up with with these late ones. 15 $15 accounts are up right now. Yep. When using Orb, how do you manage the real-time trailing drawdown on prop firms? I don't think about it. My whole key with trailing drawdown, in my opinion, intraday trailing drawdown, is don't get greedy. It's as simple as that. Don't get greedy. Take your profits when you have them. And I don't mean take fucking stupid little profits and because you have them. I mean take profits at key levels where you know you have possibilities of reversals and don't get greedy. this trade right here. This is a trade that I took pre-market. I don't normally take pre-market, but this is the trade I took pre-market last week, last Wednesday, and I had only trimmed once. This was not June, this was July. What the fuck? July 2nd. So we had this ILM here. And we took it all the way to here. Took it all the way up here. And only trimmed one time. I trimmed once at this level here. And once at this level here. So when you're looking at trailing drawdown, and especially unrealized trailing drawdown, the key that you have to think of is you get $500 extra. So $500 extra compared to TopStep. So you get 25 instead of 2,000. As long as you keep your P&L within that $500, then it's the exact same freaking thing as having a TopStep account. Don't even think about it as any different. As long as you keep your P&L within $500 of your P&L high, which is usually one trade, one or two losses in a row, then it will be exactly the same as a TopStep account. Just don't even think about it. I don't even think about trailing drawdown. And then once you get past, like right now I think it's 4,500. Let me look, hold on. It's just under 4,500 in my Bullinox account. 54.2. So 4,200 in my profits. And so after 2,600, it just goes up. So it's just a buffer after 2,600. No, I haven't taken a payout yet. So after that 2,600, so now instead of having 2,600 as a buffer, now I have 4,000 as a buffer. It's a 4,100 is the buffer I have right now. And so really what your thought is you want to get to that 26 and then build that buffer. And now you don't even, it's the same thing as normal end of day drawdown, because it's just drawdown based off of how much you have left over in your account. So to count to the calendar, there's two ways. Just go is it Alt G? Yeah, Alt G right there. And then, or you can go right here at the bottom where it says go to. What do you think of rotating accounts to trade as a way to keep your eggs in different baskets? For example, trading account A on Monday, B on Tuesday, and repeating alternatively. That's one way you can do it. I think there's a million ways that you can trade, and you can try to get tricky with prop firms. I think also it's just as easy just to copy trade all of them. What I do is I have two, like right now with my Bullinox, I have three Bullinox accounts, right? I have two accounts that are copy trading with each other, and then they just do like a normal. Right now, they're on $300 risk, and so then the next account that I have is a heavier account. So I'm usually using 5 to 10 NQ micros instead of 3 to 4, and I'm scaling up with this other account so I can get a higher buffer and get more in that account. And then if I don't, because that way, if I do, I only lose one account. If anything happens, I only lose one account versus losing all three. But that account's going to build a lot quicker naturally. So like I said, there's a million different ways to do prop firms. That's just one way. And then as these other accounts, when they start getting a little more of a buffer, I'll scale up and I'll start copy trading for all three of those together. Sorry I missed this, but what's the most way people mess up the accounts? when they get funded and how to fix this. For the first time, I went semi close to passing my first eval and don't want to lose the account, I guess. So, the number one thing that I see is people thinking about the payout. I think that's the number one problem that I have people do is they focus too much on the payout. And by doing that, they forget to focus on the process of actually trading. Because when you forget about and you focus so much about the payout, say, "Oh, I'm $500 away." And that's why I haven't taken payouts because I don't really look that often. Um, is you just focus on taking your trades and taking really, really good fucking trades. That's really what you should do on focus on taking really, really good trades. That's all. Don't focus on how much you're making. Don't focus on your payouts or anything like that. Because once you forget about the payout and you just focus on, hey, this trade was really good. It had everything I'm looking for. Taking it day by day, not over leveraging, staying disciplined, staying and not taking stupid ass trades. Like oh, this took it here. There's a 1 minute ILM after taking some random ass highs. Now I'm gonna try to short it back to Valhalla, where it's gonna be back to London lows. Like, how likely is that really gonna happen when the market's displacing to the upside? Not likely at all. So, just not taking stupid trades, not over trading, keeping them at times like, okay, I'm only gonna trade during New York AM. When you deviate from these times right here, where you say, "Oh, I'm only gonna trade New York AM," and then next thing you know, you're taking a fucking trade, and it's past lunch hour. What the hell are you doing? That's not your time to trade. Get rid of that. That's the number one thing. People are, "Oh my god, I just got a funded. I need to get this payout. I did so well on my eval. I need to do really well on this funded." No, fuck that. Just trade the exact same. You don't need to do anything different. You don't need to take more trades. You actually probably need to take as much or less trades. Be more be confident with your trades. Trade the same. Make sure that they're proper trades. Like this. This was a great trade right here. Right here. They're with your higher time frame trend. Trades with your higher time frame. This is something I've been preaching since we really started moving. Wait, what day was this? I mean, I fucking feel like I've just been a broken record with it since the 23rd of June. Really, probably since the 19th. But since this 23rd of June, I've just been dumbass just preaching every single time we've been doing streams. Just don't bother fucking shorting. Just look for pullbacks and find ILMs to the upside for that. Look for orb longs. Don't bother with orb shorts. Because that's where you're gonna make your most amount of money. The biggest moves are with the trend. Don't bother. So like right here on this day, there was no ILM short. You could not have taken an ILM short. Therefore, the only trade was an orb long, and it worked out beautifully. What about the risk go? Do you guys say to do more risk on eval versus funded? Should we drop to half risk on funded or just trade the exact same way, period? I mean, risk is different. If you are trading more risk on funded, you should already know you're consistent. That's one key. If you are already consistent and you know you have an edge, you know you have the models down, and you're not going to blow your fundeds, then yes, trade a little heavier and then go back to your normal risk, $200 risk, $200 risk, $200 risk. Your $200 risk will be your base model for when you first get funded with a 50K account. And then let's say you have like now you have 4,200 in the account. Or 54,000 for the total account. Now you can start 300 risk, 250, 300, just scales very slowly. Scaling up too fast, that's another one. Those are things that it's all self-discipline too. Thinking that you can scale up faster, thinking that and just it's ego at the same time, thinking that, "Oh, I'm better than I am. I'm overconfident. I'm" and or underconfident either even sometimes. When you're just so scared that you're not taking trades at all. That's another one where you see people just, what do we call what are they the word I'm thinking of? Um, paralysis, analysis paralysis by analysis, where they see trades and they just can't take them. That's another thing where it's like, just take the risk. You're really only risking $200 to get the fucking for the funded account. Look at this is gonna play out. Even though it's later in the day, this is still gonna play out. Sounds like Jaden when he trades live. Yeah. Jaden and I trade very similar. I love the way Jaden trades. He's a put the risk on and make it work time of die. Like right here, this is perfect. There was no reason to try to short and try to continue long, to continue lower after taking this previous day low. We're in fair value gaps. The only thing you could have done was long. No, no, no. I'm not taking this trade. I'm just analyzing it. I'm just analyzing it. It's too late in the day for me. It was me showing the difference between the displacement in this trade versus the non-displacement in the first trade we took this morning. No displacement through here. That's why this is up. And then I just wanted to see how it played out. Way too late in the day for me. This will probably continue to play out through Asia and London session though. So if you are trading London session tonight, then use this as a map. So like even when you are outside of the market sessions, this is your map. This is your road work all through here. So get back through here. You guys hear me talk about order flow. Order flow is the most important section in the trading, in my opinion. The order flow is what you need to focus on the most right here. This is order flow. We have bearish fair value gaps, and it's of the current legs, right? So we have bearish fair value gaps. We take out a high, bearish fair value gaps. We hold that bearish fair value gaps. Look at here. Every time we come into that, we never created fair value gaps all through here. Yet we kept holding this bearish fair value gap. And now what do? We kept pushing down, kept pushing down. And then finally we created, this is the first time since then, we created another bearish fair value gap. So now what do we want to see here? We now inverted it. So we want to see some sort of push and creation of bullish fair value gaps. And then we hold those bullish fair value gaps, hold the inversions, hold the bullish fair value gaps. And then we start moving up towards those highs. And that's what you hear when you hear me talk about order flow. And that's where you can really find that's what an ILM is doing, is changing the order flow. And so when you start seeing these deeper and deeper, following that is going to help you follow the trend. How was your journey in Playbit until you became a mentor here? It was rough. We didn't have prop firms when I started. We were trading US 30 with MT4 accounts with our own capital. And it was rough. There was no or options with your own capital. Yeah, US 30, which is the Dow. Yep, on a 30-second chart with Heikin-Ashi candles. Yep. But it was good. I mean, it was great. I learned from Ty. I learned from Ty and I learned from Robbie, and then I went out and I learned from William O'Neill in IBD Live Investors Daily. Then I learned from Tasty Works, learned a bunch of options, and then I learned from Casper and a lot of this. I kind of learned the orb and a lot of other things from various traders, and then I learned a lot of the SMC and stuff like that from Casper. Yeah, options is on all your own capital too. Options still only works on your own capital. Yeah, options all your own capital. How long have you been trading futures? Since 2022. I actually started out with futures options over instead of just futures, and then I found prop firms and started trading futures prop firms. And I've traded everything. I've traded gold, silver, nat gas. I've traded oil. I've traded fucking corn, soybeans. What else have I tried? We tried euro dollar, tried bonds, tried interest rates. Um, yeah, I fucking tried it all. 2022 was my experimenting year for futures. And that's where I really experimented, got into learning futures, the ins and outs, and how everything worked. And then I started, and that's where I wasn't calling out futures. And so that was before I even started out calling out futures. I was only calling out options and mainly advanced options. So it's crazy. I went to futures mainly because advanced options are so slow. Futures were much more my style. Weeks ago, I have a 100% win rate plus $50, and last week, take too much trades in a day and finish on break even. That's normal. Yeah, it's not normal to have a 100% win rate. Think of a baseball player. Think of Babe Ruth. He probably only had a 35% hit rate. And so it's very normal. The key is just to make sure that your losses don't outweigh that your wins. It's okay. It's okay to have losses. It's okay to have a losing streak. And that's the thing that everybody freaks out about is when they do take losses, especially after a big win, they think, "Oh my gosh, oh my gosh." Yeah, it's really like that's normal. That's okay. It's not it's a statistical game. It's a game of numbers where you have to think about the law of large numbers. We want to take the most amount of wins over the course of over the course of how many trades do we have now? 205 trades. Are you going to be profitable? And that's what we want to really focus on instead of just 1 week at a day, 1 week, 2 weeks at a time. We got 6 months, 9 months. I was on next strategy with break even after taking swing high or swing low. That's great. Don't change your strategy. Don't change your strategy. Keep your same strategy. That's why 100% win rate. Yeah. And again, no strategy is 100% win rate. It's got a high win rate, but no strategy is going to always be 100% win rate. Futures with prop firms just blows me away, and I because we don't risk our own capital, and I agree, Hefe, and I think it's a great tool for new traders to learn psychology, to learn the models, to forward test, to trade live without their own property, without their own capital, to learn the new platforms and things like that, because you're risking so little versus having to risk your own capital with every single trade that you can focus on the little things more often and it helps you out so much. So I think like just taking advantage of the prop firms while we have them, while they're here, they might be here forever, they might not be. We don't even know. Taking advantage of them while we have them. Don't risk your own capital to start. Learn the game and then start building from there. We didn't have that when we first started. When I first started, with Glacier first started, with Ty first started, we didn't have none of this stuff. I mean, I'm sure we might have, but prop firms were not popular like they are now. Now they are huge. They're like bucket shops back in the 1920s. If you don't know what bucket shops are, read the what was it? The Reminiscences of a Stock Operator. It's by Jesse Livermore. Just every time he talks about bucket shops, change the word into prop firms. It's super funny. Where prop firms are just like old bucket shops. They just places that lend extra leverage. I had that thought when I was reading it a few months back. Yeah. Every time I read it, I think about that. I hear him say bucket shops and I just switch it to prop firms and I'm like, oh yeah, this is perfect. This is exact same thing. They liquidate you if you can move as too if it moves against you too much, like it's all the same. They mess around with trying to manipulate your pricing sometimes, like it's all the same. It's super cool. It's great how the market is just like it's the same no matter what. Like from 100 years ago, the market same. And it's gonna be this way for 100 more years. People don't change. Right. Did I miss anybody's questions? I wanna make sure I didn't here. If I did, re-ask it. I'll make sure this will get posted up in the risk management section pretty much right after we're done here. All right. Any last minute questions as before we head out here today? I gotta get ready for camping. I'm going to be gone out of Discord, out of everything after stream tomorrow. So after stream tomorrow, I will be MIA for the next 3 days. And so if you have any questions, feel free to at me, but I will get back to you when I get back. I'm going camping, so I'm getting out in the woods, taking the kids, and I'm gonna be just hanging out. I appreciate you guys all. Thank you everybody for coming as we'll be back at it in tomorrow morning will be my last day. Yep. Do you think it's bad to take London session trades and New York session trades? Better to stick with one session or not? If you have the time to do both, do both. I recommend doing like a funded for London and then a funded for New York instead of doing one funded for both of them. And that way, if you take a loss in London, you don't have to take more of a loss. It can just be a whole different account. Awesome. I appreciate you guys all. I'll talk to you in the morning. See ya.